CFTC and the SEC has officially changed everything. For the past 6 years here on Simply Bitcoin, we have watched these two institutions not only attack Bitcoin, but also fight each other. However, last week, they surprised almost everyone by announcing that they'd finally work together. And as skeptical as we all were, yesterday, they actually came together to make a huge breakthrough, probably its biggest one in over a year. And of course, right on cue, Bitcoin crashes this morning. You love to see it. We got good news for once, and the Bitcoin price crashes. Now, I don't know if there's any correlation there, but you got to highlight it. It's funny. You got to laugh at it. You laugh or you're going to cry. Anyways, today, I'm going to show you the good out of what came out from the SEC and the CFTC and some of the bad in the new rule changes that we just saw yesterday. So this is a big story, I would say. Again, there's some good and there's some bad. Let me just get into it. So actually, before I go on, let's get the SEC chair Paul Atkins take yesterday. He was at the DC Blockchain Summit. Here is the clip that was going around. Here is his announcement, and then I'll break it down for you.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stablecoins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
Okay. I will break this down. Obviously, if you've been around for a while, this is a huge break from the Gary Gensler SEC, which is obviously, I think, because of the Trump administration's change of tune, saying we want to be the Bitcoin capital of the world. Well, they really say the crypto capital of the world, but whatever. Anyways, let's break this down. So here's the official tweet about it. And it goes, today, the commission issued an interpretation that clarifies the application of federal securities laws to crypto assets. This is a major step to provide greater clarity regarding the commission's treatment of crypto assets. The release, the official, paper, the official coverage from the SEC is 68 pages. So I'm not going to be able to read that whole thing for you guys, but I do have a pretty good breakdown from Eleanor Terrett. She's been doing really good work. This is coming from Crypto in America. And this is where you start to see maybe the bad here. This is probably where a lot of the Bitcoin purists, Bitcoin maxis are going to be like, man, this is atrocious. But again, I'll show you that there is some good coming out of this. So here we go. Of course, while we still have no idea what's going to happen with the Clarity Act coming out of Congress or coming out of the federal level, we do have some clarity coming from the SEC and the CFTC, which is some good news. That is some very good news here. No longer does it seem that we are going to be this, how was Gary Gensler always saying it? Enforcement by actions. Basically, you had no idea what was going on, and until the SEC told you were doing something wrong and they were making the rules up as they were going, we had really no clue. So it does seem like we are getting some form of, quote, regulatory clarity, at least coming from the SEC and the CFTC. And like we covered last week, there does seem to be some coordination coming from the SEC and the CFTC, where for years, as you know, Paul Atkins was just saying, they were the securities in everything, where everything was a security and everything fell under the SEC's purview. And the CFTC would have different views and be like, wait, no, you know, we are the Commodities and Futures Trading Commission, and some of this stuff falls under our jurisdiction. SEC would say everything is a security. CFTC would say, hey, no, there are some commodities that you are over-regulating as securities. Now it seems like we do have some cohesion here coming from the SEC and the CFTC. Anyways, in a 68-page interpretation of how existing securities laws apply to crypto, the agencies formally laid out a, quote, token taxonomy for classifying digital assets and address how on-chain activities like staking, mining, airdrops, and wrapping are treated under existing law. The move was welcomed warmly by industry participants who have long called for clearer rules of the road after years of navigating regulation by enforcement. Here's like a tweet where it goes, 2023 me couldn't have imagined that 2126 me would see such a thing, let alone 2026 me, said Paul Grewal, chief legal officer at Coinbase. So Coinbase is looking, they're saying this is a good thing, which probably should start, peaking up your spidey senses here. Anyways, at the core of the framework is the view that most crypto assets are not securities. I repeat, most crypto assets are not securities, and that tokens can be part of an investment contract at one point in time, but those investment contracts can end. Again, a sharp break away from the SEC under Gary Gensler. Quote, the interpretation clarifies that only one crypto asset class remains subject to the securities laws, which is digital securities, namely traditional securities that are tokenized. Obviously, we've been hearing from the likes of Larry Fink and others that they want to tokenize all the things, that all securities will now become tokenized and on some form of blockchain or whatever. They want to tokenize everything. And apparently now that will be the main thing under the purview of the SECs. Anyways, this is probably where a lot of Bitcoiners are going to get a little angry here. So, hold your tomatoes. This is not me endorsing this. This is just what they laid out. I will give you some good stuff that came out of this. But the token taxonomy itself, which divides crypto assets into 5 categories, again, digital commodities, digital collectibles, digital tools, stablecoins, and digital securities, isn't new. It's something Atkins first laid out last August when he introduced the SEC's Project Crypto, an initiative recently relaunched in partnership with the CFTC. So it's not necessarily new, but the fact that they're having a good partnership with the CFTC is news, and it is, I guess, basically effective immediately. Now, this time, though, the agencies have gone a step further, naming 16 tokens as digital commodities, shifting them out of SEC territory and into the CFTC's, and the list includes Bitcoin and 15 other shitcoins. So, personally, from my interpretation of the Howey tests, most things fall under securities laws. Bitcoin is the only one, in my opinion, as a more purist Bitcoiner, that really is not a security. Everything else, from my opinion, obviously, I think the Howey test is pretty clear. Now, going further, that's what I was telling you. There's some good and some bad. That is the bad, at least from a pure Bitcoin perspective, from a Bitcoin-only perspective. It looks like 15 other shitcoins are now considered digital commodities. So I saw a lot of people on Twitter saying, oh man, now we are going to unleash a whole new wave of crime, a whole new wave of shitcoinery. Just when we thought shitcoin cycles were going to be over, it looks like the SEC is now saying Bitcoin and 15 other shitcoins are digital commodities. So I guess our hope that the shitcoin cycle, that shitcoins were officially no longer going to even be on anyone's list. It looks like the SEC kind of skirted past that one. So that's really the bad. Okay, that's the main bad part about this. There is a lot of good. And surprisingly enough, the rage highlights the good out of this, which is really a stark contrast. If you know me, when I cover stuff coming from the rage, it's usually not that good. But this morning, they're highlighting some good, and it's actually a win for privacy here. So here's the rage, and it goes, again, highlighting the quote, the SEC has issued an interpretation that clarifies the application of federal securities laws to digital assets using definitions in the Genius Act. The document clarifies Bitcoin and other digital assets as a commodity. Going forward, only securities that have been tokenized, like I said, will fall under the SEC's authority. The interpretation ends a long dispute over SEC's jurisdiction over digital assets, which potentially could have led to the classification of digital asset developers as securities brokers with grave implications for user privacy. The interpretation appears to additionally advance clarity on proposals and market structure drafts, which insufficiently define what digital assets could be subject to broker/dealer registration requirements. The interpretation is a major win for privacy, as brokers/dealers are required to implement KYC and AML programs by law. She goes further, or Lola Lead from the Rage goes further, and she goes, a lot of people seem to not be aware what a major win for privacy the SEC's interpretation on securities is. So let me spell this out for you. Under Gensler, the SEC attempted to classify digital asset developers as securities brokers/dealers. This would have meant that anyone offering digital asset services and software would have needed to register with the SEC and apply KYC and AML programs by law. Similar language has been included in latest market structure proposals, which insufficiently clarified who exactly such registration requirements would apply to. The SEC's interpretation now makes clear no AML/KYC for Bitcoin, at least not under the SEC's authority. Probably the biggest advancement for privacy under this entire administration. And it goes further, and someone tweets, I can't believe I just read a post from you about an advancement for privacy, but I'm enjoying the sensation. And she goes, I know, right? Alas, the day has come. So a big win for privacy, at least coming from the SEC. We'll see what comes out of the Clarity Act, but we're seeing, hey, there is some good and some bad here. From a pure Bitcoin perspective, you're probably not so happy that some shit coins are now considered digital commodities. But from a developer perspective, we don't have to AML, KYC, everything now. As developers, as wallet creators, it's a huge win. It's a huge win. And going further, TFTC quoted and, highlighted that the SEC and the CFTC officially clarified Bitcoin proof of work mining rewards aren't securities and labeled as protocol mining, which you heard in that clip. So we are seeing some good here. There is some good here. Now, going a little further from the CFTC, we did get another win for self-custodial, or quote, self-custodial wallets here. And again, in terms of privacy, AML, KYC, here's TFTC highlighting this. And it goes, the CFTC just told self-custodial wallet developers that they don't need to register as brokers. Again, SEC and the CFTC both confirm that if you are creating Bitcoin wallets, you no longer have to register as a broker. You don't need to implement KYC, AML laws just for a Bitcoin wallet, though we are hearing a lot of speculations and a lot of conversations that is kind of the trend that we are going towards. So a big win here for privacy. And this is talking about a Phantom Wallet received a no action letter stating the CFTC will not pursue enforcement against self-custodial wallet developers who connect users to regulated trading venues as long as they don't custody user funds. First time the agency has formally drawn that line. And here's why it's massive. Under existing U.S. law, any entity that solicits or facilitates derivatives trading typically must register as an introducing broker with the CFTC. That rule was written for traditional finance intermediaries, but as self-custodial wallets started integrating access to derivative markets, developers faced a legal gray area that could have classified them as unregistered brokers simply for writing software. The CFTC's position was if your wallet software connects users to properly registered futures commission merchants, introducing brokers or designated contract markets, and you don't custody user funds, you are not a broker. You are a software provider. So we're starting to see, hey, maybe the open source kind of crypto wars 2.0 that we are seeing is seeing some form of clarity, at least coming from the SEC and the CFTC. We'll still see what comes out of the Clarity Act, whether we'll see some provisions similar to this, but I think this is a good move forward. The timing, of course, is not coincidental. 1 week ago, CFTC Chairman Mike Selig said at FIA's Boca Raton conference, quote, "For too long, there's been an open question as to whether software providers trigger the CFTC's registration requirements. We intend to address this question head on," as they just did. 7 days later, it's moving pretty quickly here. But of course, this matters far beyond this phantom wallet. Now, every self-custodial wallet developer and every open source protocol interface that connects users to regulated markets now has a reference point. Write software, don't custody the funds, route through registered intermediaries, and the CFTC will not come after you. For context, of course, we do have some case law that just happened that really show and highlight how big of a move this is. The previous administration used ambiguous intermediary rules as a weapon against developers. Tornado Cash developers were prosecuted, front end shut down preemptively. The chilling effect pushed builders offshore, as we all saw with Wallet of Satoshi last year. Now they're coming back onshore, or at least, opening up their wallet to the U.S. This no action letter, combined with Selig's ending the days of CFTC and SEC infighting through Project Crypto, signals a complete reversal. The U.S. is actively trying to bring developers back. So at this point, I think we got to kind of take the good with the bad here. Yes, 15 shitcoins are now considered digital commodities. Yes, from a pure Bitcoin perspective, you would have liked to see Bitcoin be the only digital commodity, though that even opens up a whole new can of worms there, because a lot of Bitcoiners would say, hey, we don't need the state, we don't need the monopoly on violence protecting Bitcoin here. Bitcoin will win on its own merits. And so that's usually the conversation that most people have. It's like, okay, look, on the one hand, I think the Howey test is pretty clear. Bitcoin is the digital commodity. Everything else is a digital security. Now we're seeing, hey, okay, look, you're gonna unload some of these shitcoins, or let some of these shitcoins through the door. But at least now, from a developer perspective, from just writing software, if you do not custody the funds, you do not need to implement crazy KYC AML laws into your wallets. So we're seeing some good precedent being set here. This is a huge change from the Gensler SEC to the Paul Atkins SEC. And now we see the SEC and the CFTC are working, hand in hand to make sure that they're not stepping over each other's toes. As I've been saying for a long time, depending on the agency, they would classify Bitcoin differently. Now we're seeing, with this push from the Trump administration about being the, quote, crypto capital of the world, that the agencies are finally following suit. Yes, it's taken a little while. Yes, we could argue that maybe things are moving a little slowly and maybe not fully in the right direction. But hey, we're going to take the small wins here. We're going to take the wins here that we can. Now, hopefully, we do see further that there is, hope something that comes out for the benefit of the Samurai Wallet devs. Obviously, they're in jail right now for pretty much enforcement by action here, that's what they called it, right? And so, look, it's still not perfect, but the world isn't perfect. But I would say this is a huge win, and it is interesting, this whole push for the Clarity Act. There's no clarity coming out of the Clarity Act yet. It keeps getting pushed down the line. There's a lot of people speculating, and a lot of people coming from DC saying, oh, it's going to happen end of April. If it doesn't happen end of April, it might not ever happen. Though yesterday we did also see that Senator Lummis at the DC Blockchain Summit, she's doubling down on this. She did say some things on the Clarity Act. There is a bit of a conversation about what is going to happen with the Clarity Act. So here's, again, Eleanor Terrick covering this. She goes, Senator Cynthia Lummis on the State of the Clarity Act, quote, said, "We are going to have this thing done come hell or high water by the end of this year." She also expects a banking GOP markup during the second half of April after the Easter break. And on yield, we think we've got it. And on DeFi negotiations, we think we've got the DeFi issue put to bed. And there was another segment here from Eleanor Terrett kind of covering the push on the Clarity Act. And there seems to be a conversation right now saying that the banks are finally coming to the table on the stablecoin yield question. It seems like they are going to compromise on it. At least that's what the rumor mill are saying. They're finally coming to the table. They're finally bending the knee on this. So, look, I'm still kind of on the idea that if this doesn't get passed soon, I know the first conversation was March, then it became, oh, now it might be end of April. Senator Lummis is obviously bullish, saying, I think if this happens, it won't happen by April, but if by the time we come back after Easter, it'll happen. The one caveat there, I know I'm a fan of Senator Lummis, but the one caveat there is that not much will get done after about June coming from the federal government. So there is a ticking time bomb here. There is the clock running out. We might get this through before the buzzer. It might not happen at all. Considering the midterms are going to come up, considering that a lot of things that aren't really politically viable coming from the Republicans will most likely get pushed through or even talked about as the midterms start to heat up, because obviously everyone wants to kind of campaign to maintain their positions or get more Republicans in the House, which isn't looking that good. So I like Senator Lummis's bullishness on the Clarity Act. Obviously, she's going to be fighting for this tooth and nail to the very end of the year. She is not going to run again for her seat for 2027. So hopefully Senator Lummis can get this through as kind of her last, I don't know, huge win before she does something else, because she's no longer going to be a senator. But that's kind of where we are with the Clarity Act. So we got some clarity from the SEC and the CFTC. They are implementing this cohesion here. They're implementing the fact that they are working together now. The Clarity Act is still not clear. It's not clear at all. It's more muddy. It should be called the Muddy Waters Act at this point, because it just seems it's just going to get kicked down the road. It's not really, hasn't seemed to have really moved forward much, though, as I've been saying, the conversations behind the scenes are that a compromise is being reached. Will we see that banks finally, bend the knee for the Stablecoin Act? That's still up for debate, but it does seem like they are willing to compromise. And that's the rumors we've been hearing for the last couple of weeks. We've heard Brian Armstrong say, we're going to compromise. We're willing to compromise. We'll come back to the table. For a while there, for last couple of weeks, the banks were saying we're not going to compromise on stablecoin yield. Now they're kind of rolling it back. And I think, again, that's all because President Trump said, hey, banks, stop fighting the Clarity Act. We want to get this through. So if there is more pressure coming from the Trump administration towards the banks, then maybe something will come out of the Clarity Act. As a good compromise usually goes, both negotiators are most likely not going to be happy, and that's why it's a good compromise. So if the banks bend the knee or are willing to compromise on the stablecoin yield, then we'll see what the, quote, crypto industry is willing to compromise on. But as you can see, this is why the Coinbase, what was he? Coinbase CIO, I believe it was chief legal officer, was so, I believe, happy about this, because 15 shitcoins are now digital commodities. There's been a huge debate amongst Bitcoiners for years, like I've been saying, about what is a digital commodity, what is a digital security. As of now, it seems like only all the tokenized stocks that they've been talking about will be under the SEC's purview. So, hey, we'll take the win for privacy. It's not the total win that we want from a purely Bitcoin perspective, but a win's a win. Okay. And I know you guys are going to be like, I'm getting trolled. Yeah. Sorry, guys. My voice is cooked. I am irritating. It is what it is. Call it the vague act, 100%. Totally the vague act. But hey, guys, at this point, is something better than nothing? I don't know. I'm kind of on the view that nothing is better than something. But if we get some good rules coming here, it really, my point of view is just get out of Bitcoin's way. Though Senator Lummis did talk about the de minimis tax again at the DC Blockchain Summit. So that conversation is still going on. Obviously, there was the whole speculation about Coinbase fighting de minimis tax. We'll see what happens. It's not looking the best, to be honest. I'm really not bullish on the Clarity Act at this point. And even looking at what the Clarity Act is going to even have, there's been, again, not much clarity about what is in the act and what isn't, because we haven't had the markup structure bills yet. We saw a little bit come out. We saw one side come out, but we won't know what's really in the Clarity Act until both sides come to the table and offer their markup bill. It is what it is at this point. I guess we'll just take the win from the privacy perspective here. So you love to see it. You love to see the change coming from the SEC and the CFTC. It is a stark contrast from Gary Gensler. And remember, when Gensler went in, we were all pretty bullish about what Gary Gensler would do because he did teach a blockchain course at MIT. We thought, hey, he's a Bitcoiner. He's totally going to do some good stuff for Bitcoin. You could argue unleashing the ETFs was a good move under Gary Gensler, though it seemed to be that he fought that forever. And now I think we are seeing what I said for a while as a troll, that Gary Gensler might have been a maxi and pushed back the Bitcoin ETF because he wasn't sure how to push back the shitcoin ETFs. And now we're seeing under Paul Atkins that, hey, yes, this will be favorable for Bitcoin, but shitcoins are totally getting through the door as well. Huge, but also, I guess maybe I'm too much of a purist. I'm too much of a Bitcoin only maxi that I have to point out the good and the bad here. But we'll see what's going on. Maybe Lex Luthor was right. Yeah, dude, maybe, I'm not the biggest fan of Brian Armstrong, but maybe he was right. A bad bill is worse than no bill at this point. And hey, we're moving forward. Is it perfect? No, but it's moving forward. Anyways, guys, I will keep the show moving. In the numbers, I got a clip. It was on Bloomberg. And we're starting to see that they are sounding a lot like Simply Bitcoin here. Remember, I've been highlighting the fact that Bitcoin has been super resilient right now in the face of this war in the Middle East. We're in day 19 here, 3 weeks in. Bitcoin, it did have a correction today, but hey, it's been acting very resilient. Are we seeing a, passing of the baton from gold to Bitcoin currently? Bitcoin is outperforming gold currently. And as well, we got some new numbers coming from the traditional financial system, some crazy numbers coming up. So I'll cover that in the news. And then our boys over at the Bugle. It is March Maxi Madness. So we're going to have a little fun at the end of the show, okay? I'm going to have a call of action for you guys. I'm going to have a special request for you guys here to wrap up the show. But on that note, first commercial break, and I'll be right back.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, guys. The current Bitcoin price is $71,310, which is a 43.5% discount from all-time high. We have, at least for now, secured the $1.4 trillion market cap, currently at 1.43 trillion, and the block height is 941,185. Actually, let me double check that because it has been acting up a little bit. 941,185. Yep, can confirming on mempool.space. That is the current block height. Okay, guys, so Bloomberg. We got Bloomberg out here sounding a lot like Bitcoiners. I think their tone is a lot more disbelief than ours would be. But again, the normies love Bloomberg. You know, the normies love the news here. And they are saying what I've been saying here on the show. That, yeah, you know, hey, Bitcoin isn't going parabolic yet. We are in a bear market. But in the last 3 weeks, and I know zoom out, whatever, like if you go back a year, gold outperformed Bitcoin, sure, I'll give you that. But in the last 3 weeks, when you'd expect Bitcoin to go down, Bitcoin's been going up. And guess what's going down? Gold and equities. It does feel like things might be changing. And that's exactly what Bloomberg is saying. Now, it's obviously too early to really be able to confirm that this is exactly the case, but they're saying it. You know, it really is a self-fulfilling prophecy here. So let's watch this clip real quick, and then I will chat about it.
First, though, let's take a look at where things stand for the last 6 days for Bitcoin. It's been resilient despite this geopolitical shock that has really set energy prices spiking and gold falling. For much of the last month, it's actually held in this range from just around $65,000 up to $73,000. But look at this. Late last night, it broke through to hit close to $76,000 per Bitcoin. That's up around 13% so far this month. I guess the question a lot of people might have right now is this acting like a safe haven? Let's also flip the chart and look at how flows to crypto ETFs have been doing. They're actually surging if you look over the past couple of weeks. Net flows for the 12 U.S. listed spot Bitcoin ETFs topped $763 million last week. It suggests that there's maybe, Scarlett, this return of some institutional confidence.
All right, well, take a look at cryptocurrencies. From Bitcoin to smaller digital coins are definitely standing out this month as winners compared with volatility in more traditional assets. Since the start of President Trump's war in Iran, Bitcoin is up about 13%. Crude oil, we know, has surged more than 40%, while global stocks, as measured by the MSCI World Index, down 4%. Even gold, which is supposed to be the ultimate haven, has slumped about 5%. Analysts say that traders are unwinding their bearish options bets that Bitcoin would fall below the $55,000 to $60,000 level. And as these negative positions are closed out, market makers are then forced to buy Bitcoin to rebalance their exposure. That has led to those inflows, creating momentum to lift Bitcoin's price. The caveat, Tim, is there's an absence of significant call buying. So traders are not at the moment aggressively taking on bullish positions.
Sounds kind of like what I've been saying here on the show the last couple of weeks. Look, obviously these numbers are a little different this morning because Bitcoin did crash down to 71K. This morning, we had a huge crash. I didn't check and see if it was at the 10 a.m. time. Yep. We got a 10 a.m. crash, guys. We got a 10 a.m. crash this morning. Oh, wait, I need like an alert. I need to play an alert here. But again, it is cherry picking. I will grant you that. That is cherry picking, but that is kind of the conversation that I've been having. And Bloomberg, I'll give them credit. They are asking the right question, in my opinion. Is Bitcoin right now, in the last few weeks since the war in the Middle East, acting like a safe haven asset? Gold, of course, historically is that safe haven asset. And maybe it's because gold went up so high last year that right now, in the face of what we're seeing in the Middle East and with oil, that people are maybe rebalancing their portfolios. Maybe they're getting scared. Now, I'm not saying that they are repositioning into Bitcoin, but Bitcoin, I was fully expecting to crash once we came back on that Monday after the war, or after that initial attack over the weekend, and I was totally expecting it to crash. Yes, it's been a slow grind. Yes, it went up to 70, almost 76K. It's pulled back a little bit. I saw someone in the chat say, like, you're saying that the Bitcoin price is acting resilient. I'm like, yeah, this is totally, in my opinion, a strong move right now for Bitcoin, considering what is going on and everything else. Equities are pulling back. Gold's kind of pulling back. Obviously, crude oil is going insane right now, and probably going to go even higher. I just saw a number coming out of what's that? Walter Bloomberg, I think his Twitter account is, that gas prices are now at the highest level since 2022. I was actually looking at gas this morning, and I was like, man, I could have swore I just bought $2.98 per gallon about 2 weeks ago, and now I saw it and it was $4. I'm like, whoa, I have not been paying attention to the gas prices really in practice here. I've been watching crude oil prices go to $100, but I would say it's acting resilient. Now, obviously, I am completely biased. I am a bulltard. I'm always going to be bullish on Bitcoin. Actually, did I pull up the here? Let me pull up the tweet here. It's actually a meme. I know you guys like the memes. I finally found the TA meme I've been mentioning on the show, and here it is. This is my interpretation of what is going on in everything, and this is TA in a nutshell. And this is the bullish Bitcoin view and the bearish Bitcoiner view as well. And you can see it's two guys watching the same exact documentary, but it is framed differently. You know, on the Discovery Channel, one is Lion documentary, one is Antelope documentary. And depending on your bias, if you're watching the Lion documentary and you're on Team Lion, you're probably excited. If you're watching the quote-unquote Antelope documentary and you are on Team Antelope, you're probably not so happy when the lion takes down the antelope. Now, this is, a good little mental picture of what I think's going on, because, look, you guys seen me and NICO kind of argue on the show. I've been extremely bullish. He's been a lot more bearish. But again, when I look at the macro picture right now, and I will cover a little more macro stuff in the next segment, when I look at the macro picture right now, I think Bitcoin is doing extremely well. It might not be pumping. We might still be in a bear market, but the fact that we aren't dropping like a freaking hot potato right now. I think that means it's resilient. I think it is proving in this very moment the idea that Bitcoin is a safe haven asset. And I brought up the idea, me and Sophie have been talking about this like for the last 2 weeks. Like, wait, was World War III good for Bitcoin? Because it's kind of doing what we all believed it would do eventually. And obviously, it's still early in that process. I don't think we are seeing necessarily the institutional investor looking at Bitcoin and being like, yeah, I need to totally own that. But we are seeing that individuals are doing that. We are seeing the price kind of be a little bubbly here. I am a wick-off MAXI, and I think it's still kind of working the wick-off accumulation pattern currently, but it's kind of taking a little longer than I thought it would. And I think this pullback is literally perfectly wick off accumulation. So I'm holding to wick off accumulation MAXI here. And if I'm right and it's true, then we might be seeing some frothy price action here. But, you know, I did also see the SEC say, if you are getting trading signals from a Telegram group or something like that, you probably shouldn't be doing that. So I will extend that a little further. If you are taking trading signals from me on YouTube, you probably shouldn't be doing that. This is not financial advice. This is just my reaction, my analysis, my view of what's going on right now. But I'm starting to feel a little bullish, and we're seeing Bloomberg basically say the same thing I've been saying. Now, I know we always joke of the mainstream media watching Simply Bitcoin. I doubt they're doing that per se, but they are looking at the same data. And I think we all expected Bitcoin to crash, and it hasn't yet. Big caveat yet, of course, but hey, only time will tell. Only time will tell. All right, guys. I do want to cover, and I saw my boy Down Under Blues in the chat say, are we going to be talking about traditional, what did he say, like traditional news noise, or are we going to be talking about some Bitcoin signal? Well, it's going to be a little bit of both. We do have some news coming out of the TradFi system, but I will, of course, put the Bitcoin lens on that. So I'll be right back.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com.
Okay, guys. So, this is whatever. It doesn't matter. Anyways, guess what, guys? Big breaking, huge breaking. The U.S. debt clock is now over $39 trillion. I repeat, we have officially crossed the $39 trillion mark on the U.S. national debt. Now, I know a lot of people watch this show and they complain and yell at us like, you guys are so U.S. centric. Sorry, not sorry. You know, we live in America. The U.S. is still the world reserve currency. I always think of what happens in the U.S. has basically downstream effects to every other country. Further, what happens to the US dollar has downstream effects to all of the weaker currencies out there. But we have officially crossed $39 trillion in US national debt with, let's see, I forget where the unspent, there we go. US total debt, unfunded debt, $107 trillion. It is absolutely unsustainable. As the meme goes, nothing stops this train. The big print is coming, and it is currently happening in real time. Now, remember, I did cover the initial numbers coming out of the Iran war of how much money they are spending on this war, and it was wholly underestimated. From what I think we were saying about like 1 billion. It was basically like 5 times. They've spent 5 times the amount that was projected. And I'm not saying that that is what got us necessarily over the $39 trillion debt mark, but it's obviously one of the things that is really accelerating it. And I think this is just the beginning. If you're hearing what Donald Trump himself has been saying, I know my friends were telling me, and I know the official narrative is saying this was not a forever war, but it's starting to sound like this is a forever war, and we're going to be in the Middle East for a long time. Now, we get conflicting statements coming out of Trump and Pete Hegseth and everyone else in the Trump administration. It seems like they're conflicting each other constantly, being like, you know, one, what's the other? What's the thing? It's an operation. It's a war. It's just a mission. Where finally, I think the markets are starting to price in the fact that we are going to be there for a long time, and what those implications are going to have on not just the amount of debt or the amount of money that will be printed to continue this operation or mission or whatever they're calling it today, but further, what's going on with the Strait of Hormuz and what's going to happen with energy. What's happening with oil? I just saw something this morning. I didn't fully dive into it because I was waiting to go live. It was like the last thing I saw on Twitter, but it looks like we might be having even more disruptions with oil that just happened basically right before I went live. So energy, gas prices, oil prices, they might be going absolutely insane in the next couple of weeks, especially as everyone's pricing in this war in the Middle East. But if you think about where we were at 38 trillion, if I remember correctly, I think we crossed the $38 trillion mark in October. So it's what? We're adding $1 trillion every 6 months? We might be over the $40 trillion mark at some point this year if they continue to accelerate this. But the math is even crazier that the national debt under Trump in the last 14 months has basically gone up roughly 7%. And that doesn't really even fully account for how much money we're going to spend in the Middle East. So 40 trillion, 50 trillion. What's 50 trillion amongst friends, guys? You know, we're just going to be adding $10 trillion here to the national debt. Man, let's just get it over with. Just get the big print going, right? I mean, look, you're going to do it anyways. I know I've said this in the past, and everyone it was more NICO than anyone in the chat was like, wow, NICO or OPTI just doesn't care about the middle class. And I'm like, look, I'm just relaying what they're saying. That if you aren't holding assets, if you're not holding Bitcoin, it's going to be very hard to save in dollars, especially when the national debt is increasing at an exponential rate. Again, nothing stops this train. And just to add on top of that, well, we did get the inflation numbers this morning, and they were higher than expected. Oh my goodness, who would have guessed? I thought inflation was going down. And then a war happens in the Middle East, and the energy prices are further pushing up the prices of things. Who would have thought? I mean, it's only second order effect here. It's like anyone that can think a little critically would have expected this thing to happen. And of course, we do have the FOMC meeting today. We know what they want to do, at least what the Trump administration wants. They want to cut interest rates. Well, the Fed it's in a corner right now. It's probably going to pause rates today. They're probably not going to change anything. But anyways, let me back up. Breaking U.S. February PPI inflation rises to 3.4%, above expectations of 2.9%. Now, of course, you guys know my view here. I think these inflation numbers are cooked, and not cooked like in the Gen Z way, but like they cook the books here. They pick and choose to basically pick the best numbers. So it's probably worse than this. But core PPI inflation rises to 3.9%, above expectations of 3.7%. And core PPI inflation is at its highest level since February 2023. And this data does not even include the Iran war. Rate cuts are being priced out. I'm guessing we're probably not going to see any more rate cuts for most likely the rest of the year. I was seeing odds essentially saying that we might get a rate cut December of this year. So pausing the interest rate cuts. Oil prices are going up. It's not looking so good here. It's almost like they had no idea what they were doing here, and it's making things worse. You know, the golden age did seem to have some pretty good narratives, some pretty good memes for a little while. The economy's turning around. I've been saying for a while that when you ignore the official narratives and you base it on your experience, your day-to-day experience, you'd realize, yeah, things are costing a lot more money. Inflation is going up. Well, of course, the national debt's going up. They are expanding the money supply. But for most people, most normie people, when they see prices go up, they consider that inflation. Obviously, from our perspective, inflation is truly the expansion of the money supply, which causes things to go up because there's more dollars chasing finite, limited products. But anyways, our boy Fernando, Bitcoin Perception, he's been on the show before. He did this really good tweet last week. And I think now that we kind of have a little more data points here, we are starting to see the bigger picture of what's going on. I think this analysis a week ago was like pretty spot on. And now that we know these numbers, we know where we are, you can see, hey, it's a good read here. So Fernando goes, I'm going to put my macro enjoyer hat on for a minute here. The Fed meets today. He said this 5 days ago. With oil above $100, we're currently a little under $100, and the U.S. is running low on missile interceptors. This is a macro setup that doesn't exist in anyone's model. Rate cuts are impossible with oil-driven inflation, as we currently see happening, and rate hikes are impossible with war-driven debt expansion, as we see is currently happening. The Fed is truly stuck. The last time the Fed was this trapped was the 1970s oil crisis, where gold went from $35 to $850. Bitcoin at $70K during the most constrained monetary policy environment in 50 years is either the most underpriced asset on earth, or I'm just absolutely wrong about everything. There's really no middle ground here. And of course, like I said, the Fed's meeting today. In about 30 minutes, we'll get the news of whether they're most likely going to pause rates. That's kind of the general consensus here. Obviously, consensus around what the Fed's going to do doesn't necessarily mean much. But here on Barron's Fed meeting today, a rate pause is all but certain because oil prices cloud the outlook. So again, you know, this was a good little take here. Rate cuts are impossible with oil-driven inflation, and rate hikes are impossible with war-driven debt expansion. We have both of those things playing out. It looks like the Fed's just going to be cooked, probably going to just keep pausing rates, which just further, at least in my mind, exemplifies why you need to own Bitcoin. You want to own a neutral, scarce, a hard capped money that isn't controlled by people, that really is the neutral reserve asset of the world. I truly believe that Bitcoin is already the world reserve asset. It just isn't being, touted that by the institutions, but it is our world reserve asset. It is the money of the world here currently that no one controls. This is why you need to own it. I think we're going to be seeing even crazier monetary policy moves. We're going to be seeing inflation, national debts expand to levels that were entirely unheard of. They're not going to be able to lower interest rates. We'll probably get even bigger numbers coming out depending on how long this operation, mission, war, forever war, however you want to paint this, however the official narrative is right now, whatever they're calling it today, continues to go on in the Middle East. We're going to see energy prices go insane. Now, there is a little bit of, or rather a non-zero chance of, hey, maybe there was a plan throughout this whole thing, and maybe they can figure this out, but it doesn't look like that's the case. It looks like we are just disrupting basically 25% of world oil coming out of the Middle East. It looks like oil's not really going through the Strait of Hormuz, at least to the U.S., though we are seeing rumors of oil being able to escape the Strait of Hormuz if it is being priced in the yuan. It does seem like the petrodollar system is currently in a very uncertain time, to say the least. But you need to protect yourself. Obviously, you guys watching, you're Bitcoiners. But we got to do what we can to try to get more people holding this thing right now, because whether Bitcoin breaks up to the upside or inflation just starts breaking up to the upside and we see, everything get more expensive because energy starts getting more expensive and oil starts getting more expensive, people need the exit route. People need the exit boat. People need the safety boat right now. This is why I keep thinking, kind of throwback to the second segment, the numbers from Bloomberg, where it does feel like Bitcoin is being super resilient. It is showing, I think, in my opinion, and I could be wrong. Obviously, either I'm right, and like Fernando was saying, either I'm right and Bitcoin's the most underpriced asset or underpriced money in the world, or I'm just completely wrong about everything. But I think what we're currently seeing, the fact that Bitcoin is holding up very well in the middle of all of this stuff, is Bitcoin was designed for this exact moment. Now, obviously, in the past, when we see a lot of bad news, Bitcoin does sell off first. But maybe we are turning the tide here. Maybe we are starting to see more people realize what Bitcoin actually is. Maybe we're starting to see more people realize that they do need a neutral reserve asset. They do want a digital money that is hard capped at 21 million, that no one controls, that you can send around the world, that you can literally grab and go if there is some kind of, hot war in your country. It's almost like Bitcoin was designed for this moment. And it's acting, again, I'll say it again. You guys can yell at me in the chat. It's acting super resilient right now. In the face of what we saw October 10th into this bear market, I think Bitcoin's holding up incredibly well. Now, I could be wrong. It could go lower. I know a lot of people are saying Bitcoin's going to go lower. We'll see. We'll see. We will totally see what's going on. In hindsight, we will potentially look back at this moment and be like, yeah, that's the moment when Bitcoin really set itself apart on the world stage. And I'm here for it. I think Bitcoin is doing exactly what it's supposed to do at the perfect time that it was supposed to do it. Crazy times we live in, guys. All right, we will be right back. I don't know if I'm going to be able to stay on till the rate cut announcement, or rather the Fed meeting announcement, but I got to plug my boys, the Bugle. So we'll be right back.
I want to give a shout out to our partner, Ledn, the leader in Bitcoin-backed loans. Ledn lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys, and not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledn has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones? They don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Alrighty then, guys. Let me see. Oh, sorry, guys. Distracted by the chat. Anyways, it is March again. And one of my favorite parody news sites, the boys over the Bitcoin Bugle, are doing March Maxi Madness once again. If you're unfamiliar, this is the culture, guys. You know, so this is part of the Bitcoin culture. Love them, love or hate the Bugle guys. I think there's one of the funniest news sites, parody sites. They're some of the smartest guys in the space. Well, it is March Maxi Madness again. A play on March Madness, you know, college basketball, where you get to vote on your favorite Bitcoin influencers or your favorite Bitcoiners, I guess. And your very own Simply Bitcoin guys are on it, okay? But my call to action here is really for me. You know, you don't got to vote for NICO. I don't really, no. All right. Anyways, here we go. Here's the brackets. They did ask me to do this a while ago, but I'm doing this because I love them, not because they asked me. So 2026 Maxi Madness tournament. Obviously, it's where you get to vote on Twitter for your favorite Bitcoiner. There's a bunch of different brackets. There's a bunch of different categories. I forget what the categories. I think this top one here. Let me find it. All I know is that I'm in the hot region. That's all that matters to me. Again, my ego is not above any compliment here. So you need to vote me for the hottest Bitcoiner. That's what my call to action is here. I have a big road ahead for me, but you know, underdog, I'm gonna win this year. Last year I got cooked. Literally my first round, I was against Sailor. I got absolutely cooked. But this year I might be able to make a little run. Okay, so we have Node region, which is up here. This is the Node region, obviously a play on the Node wars that we have currently found ourselves in. I think NICO here down here is the like PodConf region. So, you know, go vote NICO. We're going to give NICO some love here. Go vote for NICO. It starts tomorrow. There is some, you know, fanfare. There's some fun stuff to do on Twitter, but it officially starts tomorrow. You'll probably be seeing this all over Twitter, but really I'm here to use my non-existent clout here on Simply Bitcoin to have you guys vote in my direction, okay? I am using all the tools available to me, which is this show, to plug myself in March Maxi Madness. Last year, you know, I probably didn't have that many of you guys that really liked me, that, you know, I didn't really build the goodwill with you guys yet. And hey, I still can't, because some people think I have an annoying voice. I think I have an annoying voice. But if you are a fan of OPTI, you need to go vote for me in March Maxi Madness in the hot region. I'm trying to find the I'm trying to find what the names of all the groups were. There's Node, there's hot region, there is PodConf, I think, and I forget what the other one is, but this is just a little fun. Here we go. Okay, Node, Pioneer, PodConf, and Hot. Okay, so NICO's in Pioneer. All right. Nico's in the pioneer bracket. Love to see it. Love to see it. I'm over here in the hot bracket, but I might get out of first round. I don't know if I'll be able to beat Lynn Alden on that one, but hey, you never know. Crazier things have happened in Maxi March Madness. So, guys, I'm pre-warming you up. Wait, pause. Hey yo, chill. Hey yo, pause. But tomorrow officially starts March Maxi Madness. If you want to participate in the Bitcoin culture, you want to have a little fun. I know things have been a little doomerish around here, but there's still some fun left. And to me, this is part of the fun. It won't be fun if I lose first round. I love Efrat. She's great person, but I'm going to win. I'm winning that. I'm at the very least winning first round. So I need you guys all to vote for me tomorrow on Twitter. Okay. That's what we're doing. That is the call of action here. Don't like today's show. Like OPTI tomorrow on Twitter. Okay. All right. Whoever made this is trolling. Yeah. Duh, bro. All right. Do you guys not know the Bugle? Bugle is my favorite. They're like my favorite news. They're not really news. They're like the, Babylon Bee of Bitcoin. I think they're the funniest guys out there. So I'm going to do 2 plugs here. Follow the Bugle. Some of the trolls are maybe over your head because you're not fully in the Bitcoin industry per se. I always find that most people that work in Bitcoin, they find the Bugle to be the funniest people out there because they're kind of saying and doing all the stuff that we can't do. That's why we love them. And people that are just average, I don't want to say average, but just like, normal Bitcoiners, they just hang around Twitter. They're like, who are these guys? They're like the dumbest people ever. And you're like, yeah, that's kind of the point. Yeah, they are totally trolling. That's kind of the fun part. And then no, I'm not going to plug the betting, guys. Okay. Knox, we're not plugging the betting here. I do not condone the betting market aspect of this. Because I was going to bet against myself to win. Maybe I'll make a back. But yes, we are having fun. Okay. We are having some fun here. Okay. Forgive me. We still have a little fun. If it's not fun, what's the point of doing this? We're having a little fun. We're going to have a lot of fun on Twitter for the next, end of March Maxi Madness. It is trolling. It is fun. Can we have a little fun? Can I highlight some fun here on the culture? This is some of the Bitcoin culture. This is some of the stuff I love. I love the guys over there. But really, I just want to win. All right. At least get me out of the first round. What's the point of having a show where, thousands of people watch if I can't use my clout for, my own benefit here? All right. Go like me tomorrow on March Maxi Madness. Watch. I'm not going to tell the Bugle guys. They're going to start clipping this. I just gave them the plug they wanted. Actually, I will tell them. I will message them. Anyways, guys, that's all I got for you. Well, maybe we'll talk about the rate cuts, or you'll probably see them on Twitter later. I'm guessing it's going to be a pause. I don't really want to ramble for 12 more minutes. I'm actually these blue lights are killing me today. I forgot my glasses, guys. I'm in shambles over here. Okay. I'm in shambles. And I need to get off the stream. So I love you guys. I appreciate you guys. I will appreciate you more if you vote for me in March Maxi Madness. Anyways, on that note, guys, have a good rest of your day. Get outside, get some sun, eat some good food, get a workout in, get your steps in, call your loved ones, stack some Bitcoin. That is what? The 7 steps. I think that was 7. I don't know. 7 steps to succeed. 7 bullet. I don't know. Anyways, peace out, guys. We will be back tomorrow at our same time as usual. And wait, before I go, I saw some people crashing out over the late start time. Guys, if you're here, I post the show early. Just open up a tab, chill there. I start at 12:40, okay? Look, it is what it is. All right. That's when I start. That's when I'm able to get everything going. That's when I got enough energy to do the show. So, hey, if you don't like it, that's cool. That's what I do here. Okay. I'm starting at 12:40. It is what it is. All right, guys. I love you. Peace out. I will see you tomorrow. Have a good rest of your day. On that note, this is your boy OPTI, and you must vote for OPTI in March MAXI Madness tomorrow. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.